people are new to investing, they always want to know how to get started and which stocks they should focus on first. John Bogle, the creator of the Vanguard Index Funds, once said, "Don't look for the needle in the haystack, just buy the whole haystack." That is why I think index funds, and specifically exchange-traded funds or ETFs, are by far the best way to get started. And seasoned investors can also benefit from owning index fund ETFs. In this video, I want to talk about my favorite 4 ETFs with Vanguard that I always recommend to those looking to get started with investing. Before I tell you all my secrets though, why don't you show me some love and hit that like button right now? It would also really make my day if you were to subscribe to the Champagne Sense YouTube channel. Also, remember, I am not a financial advisor. I am just a personal finance enthusiast. So I hope the information in this video will inspire you of what to research to see what makes sense for your specific financial situation and goals. Now, the terms index fund and ETF are often used interchangeably, and they're pretty much the same thing when you look at the definition. They are both a collection of several different funds in that one security. The difference is, an ETF is traded at varying prices throughout the day, much like a stock. An index fund, on the other hand, can only be bought and sold at one single price at the end of the trading day. That feature is also the same for a mutual fund, which makes things a little bit more confusing because that's also several different securities in that one fund. With a mutual fund though, they are typically actively managed, which means there is a person or a group of people that decide which securities are in that fund at any given time. Because there's so many people involved in managing it, you have to pay fees to pay those people to do their job. Also, since they trade different securities within that fund, there's lots of movement, and also that means higher taxes. The higher fees and the higher taxes just eat into your profits as an investor, and that's why I typically don't invest in mutual funds. So my following list is the 4 ETFs that I like the most, that I personally own and always recommend to my friends and family to look into. I recommend these 4 because I feel like they add great diversification and at a low cost. So let's get started with the first one. You've probably heard of the term S&P 500. This is a group of the largest 500 companies within the US. These 500 companies are so large that they actually account for over 80% of the total US stock market. Now, instead of trying to find the needle in the haystack and finding the one in that group of 500 that's going to make you rich, why don't you just buy all 500 of them? That is exactly what VOO does. One share of VOO means that you own a piece of all 500 of these companies. You share in their profits and also their dividends. I also like the S&P 500 because there is no fund manager trying to beat the market. This essentially is the market. There's no buying and selling the funds because you just hold the 500 largest companies. And if one does really bad and they fall out of that top 500 list, they drop out of the fund and another company moves in and takes its place. There's really low management with it. And that is reflected in the expense ratio of 0.03%. That's a lot better than the average expense ratio of a mutual fund at 1%. Today, the price of one share of VOO is just over $300. So you can track that and decide when to buy it if it dips, if you think it's a good value. But what's really nice is you're not tracking just one company to try and swoop in at the right time and buy it. Owning 500 companies means the prices are a lot less volatile. Now, when I say the largest companies in the US, I mean these are big companies, and I am sure the names in the top 10 holdings list are going to sound familiar to you. Microsoft, Apple, Amazon, Alphabet, which is Google. You are familiar with these names. I am sure that you have heard of them. So you can own a piece of all of these within VOO. When you're looking at any index fund or ETF, it is important to look at this information. You want to know what industries that fund focuses on and what companies specifically. If I own a lot of shares in any of these top 10 companies, I would have more exposure to their price movement. So I just like to be aware what I have in individual stocks as well as what are in these funds. Another great thing about the various index fund ETFs out there is that you can focus on different industries. For example, there's funds that just have airline stocks. If that's something that you want to invest in, but you don't want to do the research on which specific one to buy, you can buy an index fund ETF for that. There are also index fund ETFs for different utilities and materials. There are really so many options out there depending on what your goals are and what your interests are. One of my biggest interests is dividends because I like to get paid. So the next one on my list is VYM. VYM focuses on companies with really high dividend yields and strong payout histories. Again, it has a low expense ratio of 0.06%. Again, comparing it to that mutual fund, you can't beat it. Low fees and higher income with those dividends, sign me up. In this portfolio composition, you will see that they are a little bit heavy in the industries of healthcare, consumer goods, financials, technology, and this is one of the reasons I point out it's important to look at this. With everything going on this year, there's a lot of movement with healthcare companies and financials. I know in my dividend paying portfolios with E-Trade and Robinhood, I have a lot of money in the banks, and that's something that's really concerning me right now because the stock prices had plummeted and dividends are getting cut. We also see in their list of top 10 companies, JP Morgan Chase is number 3 on their list. So it's important to know that when I buy shares of VYM for those dividends, there's a lot of banks in there, JP Morgan Chase specifically, and they're already one of my top holdings for individual companies. So it's good that I'm aware of this. I did a whole video on real estate investment trusts, and I will leave a link to it right here for you to check out when you're done with this. But I really like REITs. I like investing in real estate. I think it is great diversification from investing in just stock in companies. So my next one is a REIT ETF. That's right, index fund ETFs can also include real estate. This one is actually double the diversification because it's international. My next pick is VNQI, and VNQI is real estate investment trusts outside of the US. As I've mentioned, the expense ratio with REITs is a little bit higher, but at 0.12%, if that's high, then that's not too bad. This is why I love Vanguard Index Fund ETFs. Here you can see the portfolio composition and specifically what regions this fund targets. In the video I mentioned, I talk a lot about REITs and why they can be a little bit riskier, but also a lot more profitable. And one of the things about REITs is they have to pay out 90% of their profits in the form of dividends. So this specific fund has actually been a main driver of my dividend income, and I love it. It is those dividends as well as the diversification by being international and real estate are the reasons why VNQI is another ETF that I recommend. Okay guys, so hear me out on the 4th pick. It is BND, and it is the total bond market with Vanguard. Now, you may already have a decision in your mind about bonds. You might be thinking, hey, I'm super young. I don't need to invest in something that's that conservative. I have time to take a little bit of risk. But I always recommend BND to round out a well-diversified portfolio that can be profitable in varying environments. Let me tell you a little bit more about bonds. When you own stock in a company, even one share, you own a part of that company. You are an owner and you share in their profits and growth. When you purchase a corporate bond, you are giving that company a loan. They are indebted to you and they need to pay you interest. In times of hardship, gee, I wonder when a hardship would happen to a company. They can decide to reduce or eliminate dividends, and then your income is impacted. However, they are still required to pay out on their debts or their bonds. So there is a lot less risk in owning bonds. However, less risk also means less reward. So you cannot expect to make as much from bonds. This is where the rule of thumb comes from, that you want to increase your holdings in bonds as you get closer to retirement because they are less risky, and you want to reduce your position in stocks because those are a lot more volatile and go up and down, and you can't afford for those to go down when you are that close to retirement. Another rule of thumb, and this is why I own BND, is that stocks and bonds have an inverse relationship. That means when stock prices are going down, bond prices are going up, and vice versa. So I like to own BND to keep my overall portfolio with Vanguard level. So that's it. Those are the 4 that I recommend and why. And if you're new to investing, this is a great place to start. If you want to get into fancier investing, then I recommend at least putting aside a little bit of money in Index Fund ETFs so you get the benefit of that time in market while you're researching and educating yourself on how to be a strong investor in those other areas that you're interested in. And even when you become an experienced investor, I think you always need to maintain a strong position in Index Fund ETFs. The diversification and the low cost really means that you are going to profit over time. It's a long-term investing game. It is not a get-rich-quick, but that's okay because when the time comes, you are going to be grateful that you did this. And I know there are plenty of other index funds with Vanguard and even outside of Vanguard. So please comment down below with one that you love or one that you have questions on and want to learn more about. I know there are some die-hard fans of some other ones that I did not mention, so please don't be shy and let me know what I did not mention. Thank you so much for watching, and I hope you're having a great week with your champagne dreams on a White Claw budget. Until next time.